Hello, everyone, and welcome back to the channel. Today, we're diving deep into BlackRock's latest 13F filing, a quarterly report that gives us a fascinating glimpse into how the world's largest asset manager, BlackRock, with over $9 trillion in assets under management, is allocating its capital. But this isn't just about listing stocks, it's about understanding the why behind these strategic investments. So, we will be analyzing their top 5 stock buys using a comprehensive approach, evaluating growth potential, current valuation in the context of market conditions, competitive landscape, industry trends, and where I see the most compelling long-term upside. This is your inside track to institutional investment strategies. And as always, this is not financial advice. We're not qualified to give financial advice. Before diving into the stocks, it's crucial to consider the broader macroeconomic environment that's influencing BlackRock's decisions. We are in a period of heightened uncertainty, rising and falling interest rates, persistent inflationary pressures, and geopolitical risks. These are all factors affecting global markets. Now, these conditions create a challenging landscape for investors, requiring a balance between stability and growth. Institutional investors like BlackRock are navigating this complexity by focusing on companies with strong fundamentals, resilient business models, and long-term competitive advantages. Let's examine how these factors play into their top stock picks. Coming in at number 5, we have Apple, a company that has consistently been a pillar of strength in BlackRock's portfolio. Despite already being a monster, Apple continues to evolve, leveraging its vast ecosystem to drive further growth. With nearly $300 billion in holdings, BlackRock's investment in Apple emphasizes its confidence in the company's ability to maintain dominance. Apple's seamless integration of hardware, software, and services keeps users locked into its ecosystem. iPhones, MacBooks, iPads, Apple Watches, and now Vision Pro form a cohesive network that enhances user experience and loyalty. Apple is making significant strides in AI, embedding machines learning into its devices for a more intuitive user experience. Future developments in AI-powered seating, augmented reality, and personalized services could further strengthen its market position. Now, Apple's services segment, including iCloud, Apple Music, Apple TV, and the App Store, is growing at a faster rate than hardware sales. This shift toward the high-margin services improves profitability and offsets hardware sales fluctuations. Now, Apple price-to-earnings ratio remains high compared to its historical averages and tech peers, making some investors cautious. With the market saturation in premium smartphones, Apple must rely on new innovations and services to maintain momentum. Increased scrutiny over its App Store fees. This is a concern, and that could impact the future revenue streams. While Apple remains a titan in tech, its valuation and slowing growth place it at number 5 in our list. Coming in at number 4, we have Tesla, the leader in EVs and driving force behind the transportation industry shift to sustainable energy. BlackRock has increased its Tesla stake to over $81 billion, signaling confidence in its long-term potential. Tesla remains the dominant player in the EV industry with strong brand recognition and a first-mover advantage. Now, Tesla's full self-driving technology, while still is in development, represents a massive potential market. If achieved at scale, it could revolutionize transportation. Tesla is branching into battery storage, solar power, and AI-driven robotics, including the Optimus robot, potentially unlocking new revenue streams. Legacy automakers like Ford, GM, and new entrants like Rivian and Lucid are aggressively expanding their EV lineups, eroding Tesla's market share. Now, concerns over Tesla's manufacturing quality and supply chain constraints could impact their growth. While Elon Musk is a visionary, his unpredictable decision-making creates volatility in Tesla stock. Tesla's vision is undeniably compelling, but execution risks and intensifying competition keep it at number 4. In number 3, we have Nvidia, the leader in AI and GPU technology. BlackRock's Nvidia's holding exceeds 250 billion, reflecting the firm's confidence in the company's dominance in AI revolution. Nvidia is a really important company, especially when it comes to artificial intelligence. They make powerful computer chips called GPUs. These GPUs are like the brains behind many AI applications. So think of things like deep learning, where computers learn like humans, and cloud computing, where powerful computers share resources over the internet. Now, Nvidia is so good at making these AI chips that they are pretty much essential for everyone working with AI today. They are the top dog in this area. Nvidia also does well in other areas. Their gaming business is still strong. Lots of gamers use Nvidia graphics cards to make their games look amazing. On top of that, they're growing into 2 areas: enterprise AI and self-driving cars. These new areas help Nvidia make money from different sources, so they're not just relying on one thing. Nvidia just came out with a brand new AI chip called Blackwell B200. This new chip is incredibly powerful. It's much better at doing complex calculations than other chips or older chips. This new chip helps Nvidia stay ahead of the competition and keeps them the leader in AI hardware. They are continuously innovating and making better chips. Nvidia's stock price has gone up recently really, really fast because they've been growing so quickly. This means the company is worth a lot of money. However, some people worry that because it's already worth so much, it might be hard for its value to increase much more in the future. So think of it like this. If something is already very expensive, it might be hard to sell for even more money. Also, other companies are trying to catch up to Nvidia, like AMD and Intel, which also make computer chips and are working hard to make their own AI chips. Now, this means that Nvidia might have more competition soon, and it might be harder for them to stay on top. They could lose some of their market share. Now, even though there are these risks, the high price and the competition, Nvidia is still very strong in the AI chip market. They're also so good at what they do that they're still considered one of the top 3 companies in this space. Their current position is very secure despite the potential challenges. Number 2, we have Amazon, with BlackRock holding approximately 150 billion in its stock. The company's diverse revenue streams make it a strong investment choice. First, they have a huge business called AWS, or Amazon Web Services. AWS is like a giant online warehouse for computer services. So think of it as renting computer power, storage, and software over the internet. Lots of companies, big and small, use AWS because AI needs a lot of computing power, and more people are using AI. AWS is doing even better. Their biggest and most popular cloud computing provider by far. They are undisputed king of the space. Second, even though the economy hasn't been great, Amazon's online store is doing pretty well. They've been working hard to be more efficient, meaning they're trying to save money and run their business better. They've also made their shipping and delivery system so good. So even when times are tough, their online retail businesses stay strong. Third, Amazon is using AI everywhere. They use it in their warehouse to automate tasks like robot picking and packing orders. They also use AI to give you personalized recommendation when you're shopping online, so you see things you might like. So they're weaving AI into almost every part of their business. Now, because AWS is growing so much, and because Amazon is good at using AI, they are considered the second best company on this list. Their cloud business is a huge driver of their success. And the company that tops our list is Microsoft. Microsoft tops our list due to its deep AI investments, cloud dominance, and stable enterprise business. They're doing some really interesting things, especially with AI. First, they've got Azure, their cloud computing platform, just like Amazon's AWS. Azure lets people and companies rent computer power and software over the internet. And guess what? All this excitement around AI means more people need cloud services, and Azure is right there to benefit from it. They are one of the top cloud providers, so they are in a great position. Second, Microsoft is all in on AI. They have invested a lot in OpenAI, the company behind ChatGPT, which is a massive deal. Plus, they're putting AI into everything. So think about it. They're adding AI features to Office 365, Windows, and a tons of other products. This makes them a major player in the AI revolution. They're not just watching it happen, they're actively shaping it. Third, Microsoft isn't just relying on one thing. They've got a bunch of different ways to make money. They sell software to businesses. They have Xbox for gaming, LinkedIn for professionals, and of course, their booming cloud business. This means if one area has a slow period, they still have other aspects of their business doing well. It's like having multiple streams of income. It makes them more stable. So when you put it all together, their strong cloud business with Azure, their smart AI partnerships and integrations, and their diverse ways of making money, Microsoft looks really, really good. That's why BlackRock thinks they're such a smart investment. They've got a solid foundation and they are leading the charge in AI. Okay, so now let's run down of BlackRock's top stock picks. They are all about big things happening in the world right now. AI is ubiquitous. AI is everywhere. Everyone's is using the cloud, and companies that are built to last are going to do best. These stocks are in good spot to take advantage of those trends. So which one are you most interested in? Tell me in the comments. And if you found this helpful and want more simple explanations about investing, please consider liking this video and subscribing to the channel. Thank you so much for watching and happy investing.